Good morning, everyone. It is Thursday, November 19th, 2015, 8 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not indicative of future results. That was the warrior call uh, beat there. Um, Overall, we're looking at uh, quite a few news items overnight. The key one, of course, is the FOMC came out yesterday. Just to review for those who weren't here in the afternoon, FOMC minutes from the October 27th, 28th meeting show that officials expect conditions for liftoff could be met by December. The market rallied. Um, so we'll look at that in a minute. Japan reported a trade surplus of 115 billion yen for October. Economists were expecting a deficit of 246.3 billion yen. Big swing there. UK retail sales slump. Retail sales in the UK fell 0.6% in October, which was worse than a 0.5 decline expected. Havargo initial jobless claims came out at 271,000 versus 270,000 estimated. Continuing claims 2.175 versus 2.17. So a slight, just a tiny itty bitty worse release than expected. And also at 7:30 we got November Philadelphia Fed business outlook plus 1.9 versus negative 0.5 estimated. Going into today, we have the leading index, U.S. leading index at 9 Central, 10 Eastern, expecting 0.5. EIA natural gas at 9:30, 10:30 Eastern, expecting 21. And as far as speakers, we're looking for Fed Speaker Lockhart at 11:30 Central, 12:30 Eastern, and then Fed Speaker Fisher at 3:45 after the market closes, 3:45 Central, 4:45 Eastern. And that's pretty much it for today as far as releases are concerned. So let's take a look at what's up with the market. So yesterday the key expectation was it's a lot of activity. The Renko's got a lot of bars in it. The key expectation yesterday was for the market to test the overnight high. The overnight high, I forget what it was. The overnight high yesterday was way down here at 56.75. 56.75. So the expectation is for it to test the 56.75. It went to 56, pulled back to the open, broke through, and then it was expected to chop and then looked for responsive selling back into the 2049 quarter, 2049.50 to close this point of control, close the gap, and then expected the market to chop around, find a base, and then start to lift off and head towards the key target would have been towards the key target to 2080.50. But initially, the expectation is for it to test lower and then fill this gap zone. If you recall, I said there was a gap zone between the 2063.50 and 2068. That gap zone comes from right here. You see the numbers there. 2063.50 is the high of one day. 2068 is the low of the prior day. That was the Thursday gap. The expectation is it would fill the gap, pull back, and then start working its way towards 2080.50. And I mentioned 2080.50 yesterday, saying that that is our goal now because we are through the 2050 zone here, the 2050 cutoff, the LVN here. And so now we transition from one high volume area to the highest volume area this year, which is up top with the highest, the most traded price at 2080.50. And what I mentioned is that because of the range here, what I stated was that I expect the 2080.50 to be taken within a day or two. And we ended up taking it all in one day. So overall, Hypo 1 test of 2049 quarter did not work. However, again, going back to that Monty Hall example that I've talked about in the Trader Bites as well as the AMA, um, when something that is very typical does not happen, it gives a very, very high probability of the opposing hypothesis, and we always want to switch sides and start looking the other way. The primary hypo, and I got a lot of questions on this, the primary hypo, so when do I know that it isn't going to work? Once we once we start responding and coming back, and then we have a gap and a point of control below us, and then we have a range extension up. A range extension is technically it's 3 ticks or better. A break of the IB either side, this yellow line, the first hour is high or low, by 3 ticks or better. Once that happens, that is another sign that a higher time frame is in effect that basically cancels the idea that we're going to fill the gap. Generally, we fill the gap within the first few minutes. We generally have a high probability. If we're going to fill the gap, we generally have a high probability of doing it within the first hour. If we don't do it in the first hour, we start range extension up. This basically means that we're not likely to take that fill that gap in, and we should be looking to the other side. So once we had a range extension up, I was basically stalking for longs. Had an opportunity there and there at the IB. At the IB high, the IB high also represented a low volume node. So if we look at this chart, squished a little bit, we see that it broke through, tested the prior day's high, pulled back, and we have a beautiful setup here, a ledge, a low volume node, plus the IB high in that area to pull back to, and it took several tests, but it ultimately broke through and broke out. And as long as it maintains above the midline, and here below the midline would be the stop for the long. As long as it maintains above the midline, then there's no action, with the target being 2074 initially, but the main target being 2080.50 as mentioned. So the market has done its thing. We've left behind a thin profile, thin zone right here. This is something we need to pay attention to. Going forward, we have an area that's basically poorly auctioned. The market closed in the top end of the profile, so what do we expect? As you've heard day in, day out with these trader bites, we close at an extreme. We expect the market to continue overnight. We expect a test of that extreme on the next session. So the expectation is for us to take that out, that week high out. A quick overview. Recall I've been playing with this MC, this red MC here. Looks like a Hellfire. We're in this large high volume area, and note how this yesterday's profile, which is right here, note how it thins out, and then we end up with this very sharp HVN right on top of this black line. The black line being the point of control, 2080.50. Note how the market moves up and it builds this very sharp high volume node, and this is what I'd like you to observe, in that the auction, even though we haven't seen this level for a week or so, the market comes back here and the market recognizes that this is a high volume area. This is why I moved from just scalping order flow and scalping the market to playing with fibs and indicators and just spaghetti on the screen, to breaking it down to something that is much simpler, which is just what the auction is talking about, what the auction is doing, in the form of initially market profile, which I used for a while, and then I abandoned that for volume profile once I found that I can get accurate tick data to build volume profiles with. And see, you can see this volume profile, this blue area here, nice and thick, right on top of the point of control. This means that is the market was pushing into this area, and I don't have an image of it, but on Bookmap yesterday, you could see there was a ton of liquidity here coming into this price, just a ton of offers that the market had to chew through. And as the market comes into this point of control, the initial expectation is for this to be resistance, and then once it bounces back and comes in, the expectation is for it to chop in this area, and that's exactly what it did to form this high volume node. I just want to point that out to say that what I'm telling you is not some theoretical, you know, out of a textbook type of stuff. It's the market actually does what it does, and it consistently does so. And so if you look at the high volume nodes on the MC, you'll find that the market comes back and just gyrates in those areas. Here's a high volume node. The market gyrates in this area, right? And so it does this. There's a high volume node. Market has a point of control there, so on and so forth. So paying attention to the MC, to this microcomposite. A microcomposite is very simply a profile for a specific area. I can take this microcomposite and basically move it and have it detail specific areas. It'll recalculate and only give me the volume within this box. I have it going all the way through yesterday, but right now the way things are shaping up is we've pushed to 2089 quarter. 2089 quarter represents what? It represents the next immediate LVN right there. I can't draw a straight line with this program, unfortunately, but there's a low volume node there. That low volume node is 2089 and a quarter, right on the dot here. That was the overnight high. Then the market rotated down and is coming back to where it's trading presently, exactly at 2080.50, and it's likely to be stuck and open here. I expect a turbulent open. I expect it to test up initially. I expect us to rest in this area. We've had quite a run for the last few days, but we have achieved our primary objective of retesting the high volume node. So expecting it to try higher and then chop around here and potentially just stay here for this afternoon. I expect us to gyrate this afternoon between the LVN left behind from yesterday, the 2065.75 area, and this 2089 quarter. This will likely be the range today. So I expect it to push up, put in a higher high, take out this weak high, put in a higher high, then turn around and chop around today. That's what I'm looking for a primary hypothesis. Secondary hypothesis, it responds early and then starts to push up again. But again, I'm looking for this to be tangled up in this acceptance area. So I expect the market to turn from a breakout trade like we had yesterday to what amounts to a resting day. Essentially what we have is what we saw, a repetition of what we saw here. So this day here had a rally. Look at this rally. It looks almost exact. The profile looks almost exactly the same. An LVN down here and the point of control down here. And then here it is again, thin with a high volume node up top. And in between them, what do we have? We have a market that opens up higher to 63.50 and then sells off into the close and closes in the middle. This is what I'm expecting again today. The action so far, and I know that a lot of you have sent emails and so forth saying how tough this month has been, but it is really auctioning well. Yes, it's hard to trade because the moves tend to go farther than you would typically expect or whatever, but it's following the auction very, very cleanly. There's no interference right now externally, and it's basically following the auction process very, very cleanly. So it's just a matter of being patient and paying attention to what the auction is doing versus what your dome or your moving averages or whatever it is that you're doing. Obviously, people trade with different trading plans, and there are many ways to profit and lose in this market. But overall, the auction has been following what we would expect it to do, and that's basically my point. I was going to go over the Nasdaq a little bit, but essentially the Nasdaq is doing the same thing. The Nasdaq has been a lot stronger. It pushed, it got all-time highs, new all-time highs, while the S&P was struggling in that 2110 area. 2117 is the S&P's all-time high. And the Nasdaq has had a much stronger pullback and is now basically in line with the S&P relative to its volume profile. The Nasdaq is we're seeing, with the release of with the IPOs that came out just yesterday. Um, what was it? Square's IPO was really bad. It came in. They raised $243 million. It came in at a valuation of 2.9 billion versus the 6 billion expected. Tinder came out with an IPO, and they are much lower, also much lower than expected. So the appetite for techs is not as high as it used to be. And also Best Buy came out and missed and was down 6% pre-market. So we're seeing some weakness there. The expectation in the Nasdaq is the same thing. I'd expect the Nasdaq to chop around and retrace some of the rally yesterday down into this 4620 area. I'll leave you with those thoughts. Good luck to you today, and I'll catch you tomorrow. Take care.